Watch it. Oh, wow. I hate how it does that all the time, man. Hang on one second. All right, all right, all right. Oh, look at you. Is that cute? You want to come up, dude? Okay. Well, I got some echo. One sec. Give me a thumbs up if you do want to come up. One sec. I got to change this. Chin, chin. I'm getting. What's it called when you get I forget. It's like feedback. I'm adding you. Cube is in the dark. He's
Do you hear
up
me?
though. You're live, brother. What's up, guys? So give everybody just a second if you could kind of like tweet out the oh, that's what it is. It's the YouTube in the background. Tweet out the YouTube link if you can. Let's see.
How's it going?
Going good. Going good. Crazy morning already, huh?
Yeah,
Looking at Tesla just falling out.
a lot of people thought that it was
Insane.
going to rally because looks like Elon wants out of the CEO
I know, I
role.
saw that. Yeah, I was it was a little I guess I could have put that on the what's it called, the recaps. But yeah, Elon not it was like a 12-hour something, 12-hour poll or something like that. You know, one sec, I'm gonna move some of my I have a couple live trades on. I want to move off screen so they're not super distracting. See these guys.
You know what was my opening bell trade today?
You're what?
My opening bell trade today was,
You had an opening bell trade?
Yeah, like I took
Dude.
it right at the open. Was triple M.
3M?
Yeah,
Long or short?
long, of course.
Yeah, I actually have a GE. I don't know if I call it a. It's not a lotto, and it's not a leap, but it's a pretty far out of the money call. Well, calls plural, but yeah, I like those industrials. They did not flush like the rest of tech this morning.
Yeah,
But at the same time, it's kind of like it's a light week in general, right? So I think if you're new to trading, what you should know is that this week specifically, I think is one of the lowest volume weeks that we're going to have. Kind of, if you think of like Thanksgiving, you know what happened. That's about the kind of volume that we're going to be looking at. So I don't know that we would see some like major moves. We have some major targets. Interesting to see Apple kind of bouncing here. I mean, that to me, Apple's like that's the last general standing that's ready to go. I think right around here, 133. If it was going to fail, this is where she'd do it one more time. Yeah, just looking across. I have a couple levels on SPY. Actually, kind of just hit one too. So we'll see. I don't think I don't see it just completely falling out today. Although I will say, were you trading in 2018, Cube?
No, I wasn't. I started off in 2019.
So go back to 2018, December 2018. Look at that chart. That's what this one reminds me of. I would hate to see that. Actually, we'll take a look at this together. But today's kind of like theme. So welcome, by the way, if you're new, we need to get this link out. Give everybody a little bit. If you guys can retweet it, let me see if I can retweet it, send it to your friends, show up. I think this is probably going to be one of the last ones till we get to really like next year. I mean, do we have, let me see. Next Monday, did you know that Saturday, is it Saturday? Saturday or Sunday? Sunday is Christmas. Is that insane?
Yeah, right on.
So I think we don't
you
have
already buy all the gifts.
Stop it.
You get them? You already get them?
No,
I still gotta do Christmas shopping.
I honestly, like, my fiance told me that Christmas was this weekend. I was like, what? Or next weekend? I was like, no, something's wrong there. But no, she was right. It is it's Sunday. I was like, holy crap. So probably got some running around to do. Probably what else, we might have a little lighter week in general. Few viewers. Let me see if we can get look at you guys. Morning, Nick. Got a couple new people. Brandon, morning. Look at Michael, morning. You guys, I'm surprised. Yeah, I am surprised. So Michael's like, I'm surprised futures moved that much already. I'm a little surprised too. Not super surprised. I don't know. We had a little gap up Sunday, like Sunday morning, or was it Sunday? Sunday's like 3 p.m. my time Pacific, but we kind of just came back and retested. Looks like Friday's low just now. It looks like a little bounce at the moment. So we'll see. All right, guys. I think we're good. I'm going to go ahead and start this. If you're new or you're just watching this later on, we are professional traders. So we trade for a living. So that means that we approach trading like a business, if that makes sense. It's not exactly a hobby for us. So we got to do our homework. We take it kind of seriously. But hey, look, the idea is to show you guys what we do or what I do, and some of the guys that I bring on in our trading. It's not just like buy, stock up, buy call, stock down, buy put. There's a lot of thought that goes into stuff in this kind of show, I guess I'll call it. Really today, it's mostly, when we do these, it's mostly about like, what's the week ahead going to look like? What are some of the setups? What are some of the headlines that hit over the weekend and last week that we want to pay attention to that could potentially move markets? And what's the general sentiment overall, right? Like, is this a week to take big shots? Is this a week that we should expect range bound trading? All that kind of stuff. How do we figure that out, et cetera, and so forth. So that said, I'm just going to hop in here. I do have this nice little disclaimer I'm supposed to read every time. So you should carefully consider whether trading is suitable for you, considering your circumstances, knowledge, and financial resources, as you may lose all of or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not necessarily indicative of future results. Ta-da. Here we go. I'm getting confused. I got like multiple cameras here right now, so I think I'm looking at that one. Oh, I'm way over there. All right, a little different. So sorry if I'm not looking straight on. So here's the headlines in a nutshell. And we'll look at this on the charts and we can see a lot of it. So I think it was Tuesday. Was it Tuesday, right? Yeah, Tuesday we got CPI. And we knew coming into last week after the Monday trade plan that Tuesday was going to be one of the biggest days of the week. And then immediately, actually, we've been building up to this for 3 weeks, I feel like. And the market was clearly anticipating some pretty, they had already priced in a lot of it, let's say. And when the headline actually did come in and it was lower than expected, it was more like a sell the news event. And unfortunately, I kind of saw that coming. Hopefully, you guys were on some of the spaces or in the servers with us. But it very much was a sell the news event. And immediately after that was Powell's speech and the FOMC rate decision. So why CPI coming in lower than expected was bullish temporarily for the market. That means inflation is starting to come down, but it's still high. And at the end of the day, that's really, what the holdup is. Yes, it was a little bit lower than expected, but man, it's still freaking high. I actually looking at inflation rate year over year. Yeah, so we're at 6%, I believe. Core inflation rate, not headline inflation rate. I could pull up headline inflation rate in a little bit. But I'm going to start looking at core a little bit more also as we move forward. I think that's probably what Powell's going to be looking at as well. And then we got the actual rate decision Wednesday, which, surprise, 50 basis points. I don't think that, that's exactly what the market was pricing in. I really didn't see anything happen. So at that point, we're like, okay, well, we have lower than expected core CPI or CPI. We have exactly what we expected from a basis point, from a rate hike perspective. So what else is there? There's more potential downside than there is upside. And sure enough, the second that Powell opened his freaking mouth, man, the market just started to take a dump. And really, if you dive into that speech, to me, it was like, well, there's a couple of things. He started talking about balance sheet reductions, and we'll actually take a look at what that looks like right now in a little bit. And he's really just like, there were some specific comments on, are you going to change your target for inflation? So meaning, like, I think it was Steve Leisman, CNBC, was asking if he's going to change the 2% inflation target. And he said no, just kind of like adamantly, didn't even cross his mind. So that means they're still going to be targeting that 2% inflation rate. But what he did say, and correct me if I'm wrong, as I remember it, and I didn't dive into actual notes or as I remember, he did kind of allude to potentially changing his terminal rate target. So not going to change the goal of 2% that we're going to get to, but he may adjust their terminal rate target. That's really what I heard. Talked a lot about the job market and employment situations. Really, just kind of like expecting, what he's saying is expecting modest growth and elevated inflation, but that means that he's expecting unemployment to start ticking up. So as we move forward, there are a couple of things that we definitely want to start paying more attention to. We haven't really been watching continuing claims, jobless claims, things like that. That's definitely something that's going to start getting on our radars. And he's basically saying, hey, look, I'm expecting like an actual recession or pullback. And, maybe the rate hikes are starting to work, but the problem is that it's really in like the services sector. It's in wages, and it's in things that are really sticky now. And so in order to actually cut down on wage inflation, he's got to like really destroy consumer demand. And when we look into this balance sheet reduction, holy crap. I looked at that this morning. Have you seen this at all, Cube?
No, not at all.
So we're going to look at this. While we're trying to crush consumer demand, the government, the U.S. government, is spending a ridiculous amount more than they were intended to. So I don't know if anybody saw, there was a headline. I think I don't want to get too political here, but it just sucks. There was a defense budget went up by like $100 billion for next year. So it's like, well, that was like unanimous passing. It's not a bad thing, right? But it's just, it is what it is. While we're trying to battle inflation at home, I don't want to say at home. Well, we're trying to battle inflation. There's a lot of other things going on, and the current uptick in spending isn't from defense or anything like that. That was just a budgeting note. But we will get into that. So here's the rest of the data. So inflation rate, here we go. So inflation rate month over month came in actually at 1/10%, consensus being 0.3%. And this is, as you guys look at this stuff, and we're going to get a little bit more into this. If you didn't know, look, what moves markets is not actual numbers. It's actually how far the actual number is from the consensus number. So if the consensus number is 0.3% and the actual number comes in at 1/10, that's a big deviation. If it had come in at like 0.6 or 5/10%, 0.5%, then we probably would have seen a huge sell-off. Because the number came in cool, we had a huge pop in the pre-market, and it was clearly a sell the news event, and it was immediately sold into. That puts our core inflation rate year over year at 6%. Let me see if I can do this. I grab our headline inflation. And so it put the headline inflation rate at 7.1% overall. So currently, headline meaning all in inflation, 7.1%. That's where we are today. It's a bit much. And we've now moved, after 50 basis points, we're now at 4.5% on the Fed funds rate. So 7.1% inflation. minus 4.5% interest rates. We have a negative, what is that, 1.6% real rate. So still not making money on bonds, still not at, they're not in the middle or at least matching. So for sure, he's got to get to, well, this is why he's potentially changing his later on target terminal rates. So we'll see, but it's going to take time. That's what's sure. And I think that was intended to be the core of his message was, the market might be expecting inflation to cool down a lot faster than it actually may, or than they're expecting. The market's kind of talking about pivots and things like that. That's just not going to happen. We're going to stay at this rate of hikes for longer than what most people are expecting. And that's what his messaging was, that he wanted to me, that's what I heard him say, that he really wanted to really put out there, right? Did I see Philly Fed revised jobs down 1.2 million? No, I didn't see that, but that interesting for sure. Yeah, so I mean that the jobs and the labor market in general. So services we're gonna want to take a look at. That's why Friday we also got this services PMI flash. So anything under 50, I believe, is in contraction, so not expanding. 44 continuing to go down. Initial jobless claims, previous 231. So this is the number. This is not going up right now. And I think most of the consensus that I can see or hear that I'm hearing seems to be more around like white collar jobs. So not so much like the blue collar line levels, jobs, but maybe like tech and things like that, or other white collar jobs that might be going away. At least that's where the job market is cooling off. So, and again, I think we got retail sales. I don't know if retail sales really moved the market too much, but it was a little shocking. For November, it came in negative 0.6%. They were not expecting, the market was not expecting this to come down that low, which is weird because it's kind of like, well, they are spending less, so that should be good. And we get a little battle between like bulls and bears. So I didn't see us flush yesterday or last week. We kind of hit this base of support and kind of bounced off, and we're playing with it one more time right now as we speak. One thing I did want to note is I don't usually put this here, but the Baker Hughes oil rig count. So every Friday, Baker Hughes puts out an oil rig count. So how many oil rigs are up and running right now? This is the second week we came down. So 2 weeks ago, we were at 627. And then we were at 625 last week, and now we're at 620. And if you guys look at crude, I was thinking
data came in today, right?
What's that?
Was that the data that came in today for oil?
No, Baker Hughes is just a rig count. So it's basically like how many oil rigs in general are up and running, functioning, right? Drilling, pumping oil right now. And I can take a look at this.
I lost you on the stream, yeah.
Really? I see you.
I can see you. I can hear you
now. So let's go. Previous week. So yeah, I'd go down to Friday. So Baker Hughes oil rig count. This is what it looks like here. So 620, and we're coming in from here. So 600 in October. Where was crude? So when crude was at its peak, just gonna look at a different chart over here. Peaking out in June, June. April, right around here is 500, give or take, rigs. So is there a number of active U.S. rigs drilling for oil? And really, I just saw a different chart. Right here. There you go. So 627. And it looks like we're coming down. Crude itself didn't get to my 60-ish, 67-ish dollar range. We are kind of putting in a lower high, but at the same time, today looks probably bullish. Looking at this chart.
I've been trading oil recently. And the move that it did today, I mean, making it intraday like that. I don't know if there was in the news or something like that, but the chart itself is holding. What it's basically putting in a higher low off of
Yeah.
the 618 from the last leg up. So
So he's
that's
talking about this chart right here.
that's very bullish,
Yeah, super bullish. So just
and
on
it
a
could be a
daily,
change of trend.
yeah, just on a daily perspective, just looking at daily candlesticks, um, what he's talking about. So this is the last high. This is the most recent high here, right? I'll move all of these off. Here's the prior low,
So
which were,
basically, putting in this low, it starts what you call, the
yeah,
inverse head and shoulders, right? It's not on
yeah,
these shapes, but this it is. If this is gonna be the next low from the prior day lows, and then today's low is basically a higher low, then we're gonna if we get a higher high, then we have a change of trend already. And we're looking at higher oil prices, which will feed into the higher inflation um, idea, So
yeah.
we'll see what happens.
So this is not really. So let's call this price of interest, right? And then this would be, if this gets above that, that would be a break of structure, which we're basically toying with right now. And then above this would be a clean change of character, meaning like that whole downtrend would be out the window because it would be putting in a new high. So right now, yeah, we're looking at this. This was essentially on a larger view. I'm sure it would be even more bullish if you took a smaller view in something like this, which, yeah, that would be changing structure probably right about now.
Looking at
But
a daily 20 SMA and EMA,
yeah,
those
so
two
this
are
gray
gonna
line
be the
here is
lows.
the 20-day right here. And this blue one, 50-day. So, I mean, if it does get over the 20-day, what's the 20-day at? 76?
A good candle close
64.
above it will
Yeah.
trigger
Close
some
above
buy.
would be pretty bullish. I think all of this, the most of the headline was as the government buying back, refilling some of the SPR, right? So strategic petroleum reserves. Actually, I think I heard a headline. It was like they sold at like $95 a barrel and are refilling here. I think Biden said he wanted to start refilling around 70. So that's very likely what we just recently got. I don't know that it's going to go parabolic or anything like that. But it looks like it's at the bottom of its current downtrend for sure. Man, 1, 2, 3, 4. Look at those days, those
I mean,
nasty 1, 2
the
red
question
days.
is if XLE and oil names are gonna get benefit from some upside on oil, if that's what's coming. Because I mean, we knew that they were overextended. They were not reacting to the oil downside until recently,
Yep.
and maybe if they do react to the upside, we do have a change of trend on oil. Then we have a lot of upside to run into energy names now that they pull back, and I'll be looking for some opportunities there.
So I'm just going to grab this support level real quick while we're doing this. Right on here, this is 373. So I'm going to watch this level, and we have a fair value gap too. I'm just kind of going a little bit off track, but we got a fair value gap at 375, which is one of the prior CPI reports
I
right
was going to
here.
ask you about that. What do you feel about the market coming in down to almost fill the gap to CPI? I mean,
Yeah, so this is where we are right now. I think this blue line is the anchor VWAP from the COVID low. See this red line? It's not going to be super important. I think we do like half a week's range, so potentially we could get down to that 375, but I don't think it's going to be like right away. What's the calendar look like this week? Christmas. It's a tough week. It's a slow week. That's for sure.
so I'll be looking at 1100 for no 11,000. What is it on NDX? Uh, for maybe a possible, that will be the gap fill, and
Now
then
you look at the cues.
yeah, I use most. I a lot of times I think the answers in the cues.
Yeah, 1109. No,
Yeah.
you got a fair value gap 10913
Are you
on the
taking
cues.
from the push from the CPI report, right? Which
Yeah.
I think is fair. I just take the prior day's highs range to give me a gauge, what I call myself a true gap, because
Yeah.
I know that the CPI reaction came in from a lower level, but the prior day highs, there was still activity on those levels, right? So the prior day's highs will give you what is called a true gap, so there's no price action in between the high and the lows from the next day when there was a gap.
Yeah. I'm just doing this. So right now, I think this is going to be your hard support. Yeah, right around, what is this? 1168, give or take. That was from June. But yeah, you definitely have a potential to bounce right here, right where we are too, right off the top of that lower consolidation. So it's a little tough to short to me, in my opinion. Right now, it's like right there. If you see something moving that's crystal clear, yeah, for sure. See this. And so if I took, and I typically use like a 30-minute chart. So if I took like an average week's range from where we open today, if we went a full week's range, that would take us to 258 on the Qs. Wow, that's like the bottom of this consolidation. And really on the Qs, since most people trade the ETFs, that is this fair value gap right here would be your target. 264, call it 265. Is that your target?
Oh, I'll take the prior day highs before the where you
Yeah. So
started us.
typically I'll just do like swings for,
So
at some point this week, if we do hit 265, that's probably where I'd be looking for the market, expecting the market to take a little bounce. And actually, I like that because it's kind of like halfway of an average week's range. So this orange box is an average week's range. Yeah, I like that idea. It's kind of just a bounce trade because you're just going to be taking it up to this morning's created fair value gap, which is going to be
I'm looking at
273.
268.55 as the level that I'm watching.
260 what?
268.55. That's gonna be that just clears the whole idea of a true gap. Then you have the fair value gap into, So I mean, I go step by step, right? True gap and then fair value gap. Well, that's how I will consider this.
Yeah, so this is just so you know where just so people know where you're coming from. So
Yes.
this is just using the daily. This is a session gap. I keep calling it fair true gap. So I'll call it session gap. So from session to session, right in here. And then if you have extended hours on, you can see that's basically this whole. Here we go. But yeah, I like that both ways. So 280, 268. 50, little about that. Yeah, I like that. And then be out. We're so close already, man. So close already.
Yeah.
Too crazy. Yeah, it looks like Tesla SPY coming in little. Look short. Look short right now. Below 380. Yeah, it's short. It's just unfortunate. And crude. I think crude kind of like stays inside that little chop zone for now. What's funny is that I'm watching the VIX come down while the rest of this is selling off, but it's not like selling off with massive velocity. So just be really careful. I think, if I were to pick a strategy right now, last week I sent a couple bull put spreads. I haven't. What's up, X? Yeah, if you want to hop in, dude, you have the link. You're more than welcome to. Last week I sent a couple bull put spreads just when things were kind of nearing support. I think this week, probably call credit spreads, bear call spreads, whatever you want to call them, probably something similar. But I just don't know that things are going to just completely explode one way or the other. So that's really what I'm thinking. If you're inclined, potentially calendars, but I think that the very short term, short dated expiration credit spreads have been working. I don't send them typically, but I decide, but I do them a lot. And a couple of guys in the group were like, "Hey, how come you don't send them?" And I was like, "You know what? I should," but most people just don't like to. They look at it and they're like, "Oh, I don't like that risk reward." But like the way that if you know how to do them right, you can get really good risk reward on the right setup. So. Yeah, crew. That's there's a peep that rejection for crude. Yeah, he's talking about this right there. That's exactly right. So we're expecting nothing. Tommy's asking, are we expecting nothing but choppiness? I don't know if it's choppiness. I think that, if you get down to the bottom of this range, I think you could trade this, 5-point range, give or take. But just probably your choice of contracts you may want to adjust those. The series, like how far out you're going. I've been doing 2 weeks out for my swing, not this week, but maybe next week. And maybe a little closer to the money than you would typically choose, as well as taking profits a little quicker than you would typically take. So I think all of those together, what you should expect here is not a massive move. That's I think the moral of the story. Technical analysis is hocus pocus, yeah, for sure. All right, so I'm going to get back to the rest of this. So apologies. I promised that we would take a look at the budget. So this is where we are. So the budget, too funny. Well, not funny, actually. Let's see if I can get back to where was my screen with. Just go to calendar again. So this was last week, previous week. Monthly budget. So it came in at 249. Let's see if you guys can see this. So down negative 249 billion. So versus 88 billion. Really, when I looked at this and I was like, where is that even coming from? So 6% rise from the year before. Extra costs in education. So 18% increase in Medicare costs, 94% in that was that student loan forgiveness program. That's massive. And they're taking in less money. So this is the balance sheet, right? This is our government. So that's the deficit is what they're talking about. Federal Reserve earnings. So yeah, this is we're going to see increasing costs for the government, income going down. It's toughy for sure. All right, so let's get to this week. This current week. So today, really nothing major. Housing market index. Tomorrow, housing numbers. So building permits, housing starts. I don't think that that's really going to move markets one way or the other per se. A lot of rate stuff, and it really didn't come in. So we get two things on Thursday. So we get GDP. So the final number for Q3 GDP, this will be a big deal. So GDP estimates definitely move markets. If you look back at the charts, always move markets. Growth rate. Well, the final Q3 growth rate, if it comes in negative, that's so we were negative Q2. So remember, 2 negative GDP prints in a row. Constant. That's the definition of recession. The old definition of recession, assuming somebody doesn't change it. Last estimate came in as a green number, positive. So we'll see. This is Thursday. That'll probably move a little bit of the markets. And we also get our jobless claims, continuing claims, things like that. And I think we get the real PCE number on Friday. So what's weird is like super light week, But then Thursday, Friday, we get hit with two like rapid fire pieces of major economic data. So this is a toughie. This is a toughie for sure. If anything's going to move the market, I think it's going to be the PCE. This is definitely the Fed's number one gauge. So PCE is like personal spending and stuff like that. This is, let's take a look at this. Yeah. Deflator. This is the Fed's number one gauge. Basically spending. So we'll see. If this one comes in, what are we expecting? 0.3%. If we come in at like 0.1%, that'd be like, you would think that's going to be good for the markets, but we would probably rally a little bit off that. Oh, third GDP was because of net exports. Yeah, that's a major anomaly if that's the case. But yeah, this number right here, if it comes like way off base of where the market's expecting, I expect to move. I just don't know which way. Core PC index year over year. Here you go. So core PC month over month. If that's lower, I think that's bullish. If it's higher, probably very bearish. That's where we are. So biggest days of the week, actually Thursday morning. I wasn't expecting to see Thursday morning come in have that much stuff, but it does. And then really, it's like the most active is going to be this PCE number on Friday. So it'll be a wild Friday for sure. If anybody's trading, that's what I can see so far. All right, let's get into. I think that's pretty much it. Yeah. Let's get in the chart. So I think we hit SPY already. We're right at this level right here, 380. Looks like we're bouncing. We're not able to flush just yet. So if any of my crew know, hey, look, if we can't flush, then we got to go up a little bit to attract more buyers. What would that look like? It looks like this level right here to me. So this is yesterday's kind of like, or Friday's pre-market low. This level right here, 382.45. If we do get something to pop around there, that might be a level to think about shorting. I could pull it up. Yeah. So right now, 382.50 on SPY. That's our support that we just kind of broke, right? Your floor support hasn't really flushed yet, so we could chop in here. I know this kind of looks like it's kind of choppy. I wouldn't take short unless you break, fail, and retest and reject this 381.13 level. Do you have a level on SPY? That was Friday's low. I think your target's the same, right? What's this lower end target?
I have about the same idea on SPYs. You know,
so let's do this. Let's do the same thing on SPY for your session gap. So your session gap. Oh, there you go. So we're hitting the session gap right now.
Yeah.
So session gap on SPY 381. That's major support for what's a major pivot, let's say. If you break below that, then yeah, you could fill this fair value gap. But I don't know. I don't see it happening right now. Maybe a slow chop to the downside. And then if something happens on Thursday, Friday, you never know. Everything can change. Everything will likely change Thursday, Friday. I think we went over the Qs. So same kind of thing. The Qs would be exact same level. So let's call it this level right here. 272.79. I don't know that I want to go that high here. Qs looks choppy to me. Gold, on the other hand, is interesting. So crude, well, I think crude kind of chops. I'm going to throw bonds here. Those are having a little pullback. So the Dixie right now is going to be, as always, super important. If the Dixie comes down, it's still, again, good for gold. Gold futures is a GC. By the way, this is the 200-day moving average that we just bounced off of this morning. It still looks bullish to me. doesn't look like it's going to explode right now, but if you have an investment mindset, I definitely want to have some exposure. Gold, silver, gold miners. I haven't looked at silver miners yet, but potentially something to be had there for sure. So I like this bounce. I just don't, again, without the volume, unless something crazy happens, I just don't know that we're going to be exploding any which way just yet. What's important to note, and what I did say we were going to take a look at, I said that I would look at 2018, right? So December 2018. Did it pull back? Where were we? The January. I got to change this. Maybe on hourly. Oh, there you go. So this is hourly chart. I could find it here. I already have this marked out. All right, interesting. So this is from October to December of 2018. S&P had a 20% drawdown. Christmas Eve 2018. I will not forget. But here we are. So this is December 24th, 2018, Christmas Eve. This was the bottom. The reason I think that this is kind of important is that this situation here, we were in like a quantitative tightening situation where we were raising interest rates. The December of this month was, I mean, obviously a lot worse, but from December 19th, oh God, to really December 19th, this was the Monday, or I don't know if it was a Wednesday, December 19th to Christmas Eve, market took a 10% nosedive. And I was looking at some of these option chains, and we were looking at Microsoft specifically, and I was like, look, all the put volume, super short dated. It was very, very short dated on some of these things. Microsoft, tagging that 140 level, critical level to hold. But I didn't see any major, time being bought on the chain. Definitely not. Kind of interesting to me. And there are more calls than puts. But I think kind of goes to that, potentially selling upside calls. Sorry, just checking on some of my other trades too. Yeah, it looks like we're starting to base. Be a tough one. The only one I'm really excited about for my shorts right now is Moderna. So I'm very short Moderna right now. I didn't send it to the bot or anything. It was I'm in 190 and 180 puts. But yeah, we'll take a look at that too. That's probably gonna be my biggest short target at the moment. But yeah, so this is what we're looking for. We're looking at. So unfortunately, this is what happens when all your volume kind of dries up. Let me see if I can turn this volume on. Yeah. So volume Wednesday. So Wednesday this week, that's when people just tend to shut them down and take off. So be cautious of Wednesday. Then coming into Thursday, Friday, when we do get that data, it's gonna be a funky situation. So typically Wednesday is the day that everybody packs up and says adios for the rest of the year, and then they come back in January. But if that does happen, have some dry powder. Christmas Eve 2018, that was the bottom. Opened up, right around there. Looks like the 26th, and Christmas Eve was a half day, by the way. But I remember there were no sellers to be found or no buyers to be found. And it was just like from Wednesday on, Wednesday, Thursday, Friday, and Monday, it was just like nothing. Nobody was to be found. No buyers in sight. And it was just like that's what happens when you have a low liquidity situation. So be very, very cautious of what you're trading, both in terms of stocks and options this week. And Wednesday is your day. So that was basically, that's the main thing I want to say. Wednesday is the day where everybody disappears. So careful for that. All right. Let's take a look at some charts. Gabe, do you have anything? If you guys have anything, let's put them up there. But we're going to run through this really quick.
I just went long for Spice calls for Friday. This is a personal trade. I actually posted to my own group, and I'm up 10% right now. So I'm buying this level. We were just talking,
Yeah.
We fill the gap on CPI, and we're extended to the downside. And like I said, it's tough to short. And
Yeah.
I see some sectors, like XLB, healthcare is bouncing at the daily 50 MA, XLP as well. So if crude oil starts going up, there's gonna be another upside for energy if that happens. And I just don't see really a lot of upside on what's it called on discretionary and communications and whatnot right now. And those are heavyweights, but if they do turn around because everything's kind of extended to the downside at the moment,
Yeah.
we're gonna see at least a retracement higher. If the market's gonna go lower, it's still gonna go higher, so it can go lower later. And I don't know. We'll see what happens. It's a good level, you know. I think if the Qs do not fill the CPI gap, that's MGI,
Yeah.
that really the market is really wants to go up more than a retracement, to say the least. So we'll see what happens. I mean, I'm a small size, I don't really swing weeklies, and it's best done in a spread because of time decay and whatnot.
Yeah.
But this I believe is a good level. So we'll see what
Yeah.
happens.
No, it's a nice little bounce level, right? I think that's exactly like the type of trading that we want to be doing. So I'm just looking at, consumer staples down the least, industrials right after that, and energy. Interesting to look at a 5-day.
And I'm long also Pfizer. Pfizer is also bouncing at the daily 20, and
Yeah.
also I'm looking at potential upside on XLV, so I'm gonna start looking at some names that look appealing on daily charts and
V is in
whatnot.
Victor. Yeah.
Yeah, Lias and Victoria, healthcare, like
Yeah.
healthcare.
So
Um,
XLV.
if you guys happen to find one that looks
So
good,
I'm short Moderna. That's like probably one of the ones in there. So if it'll fight, we'll see.
we'll see. Moderna's is still going lower, and I think it's it's
Merck.
getting near the. It had a breakout from a very balanced
Yeah.
area, and it's very near to retest the that breakout. So
Yeah, I have this level right here, like 185, give or take, is the first real target for me on Moderna. But it was just like, if it didn't hold 200, so 200 for me was like that major level on Moderna. Not like we had a bounce this morning, kind of opened green, right? This 196 right here was my kind of like line in the sand ish, if you will.
yeah.
Had that pop, but it really just kind of like failed for me right up here. So I was like, tried to get, wasn't fast enough for me to send anything out. But I was trying to get these 190s at like 240 or something like that. They're over 5 now. It's way too late. I wouldn't say jump into this trade at all at this point. But if we do break down below this, I have this, initial 183 level, and then could go all the way down to 160. But this was kind of like a headline driven thing. I don't think it was exactly following the sector, but it's a big weight in the sector, or it's a decent weight in the sector. I don't know what the actual weight is. 1.28%. There you go.
Decent.
Let's see. UNH is the biggest weight in that healthcare sector, followed by Johnson & Johnson, Pfizer, Lilly, AbbVie, and Merck. So there you go.
Lilly looks good right here.
Pfizer, I was
bottom
actually
today.
short too this morning.
Bottom today, Lilly, the daily 50. Those are pullbacks that are viable. If we start placing two downs to upstart reversals on those names,
Yeah.
they're gonna start going. So, I mean, it's
Yeah.
just day one. This is where it has to find a base at those 50 MA, those lows of retracements, and then the next day is about holding above those highs if it starts breaking higher, right, on healthcare, and we'll see. I mean, this
We'll see.
type of
Right? It's kind of like,
setup,
are there going to be buyers, right? Like this is a critical level for Pfizer right now to me. Either it fails and it goes back down, near that 200, or it reclaims that trend altogether. Let's see if we can get.
I'm long the 52 calls, and they're cheap, I believe, because
They're super cheap.
if this if we do
Pfizer
have
is
a
always
green
like
week,
super cheap.
if we do
By
have a
the way,
green
if you
week,
guys
we
are
can hit 55.
listening to
So
keep, it's very short dated. This is the probably line that you're looking at, right? So far, a little doji here.
yeah.
Decent little channel up. Yeah. I think I have those somewhat leaf calls. I'm kind of torn because of this.
So
I
I'm
don't know if
already
it's
up
gonna
on
go which way.
Pfizer 30%, but it's just
Yeah.
I look at this play and I kind of like the idea that if today, let's say the day kind of says like this, and tomorrow it opens about this high,
Yeah.
then we're
So
gonna have an immediate two down to up reversal.
100%.
Boom.
So tomorrow is gonna be the real trade, like, well, directional trade, assuming it's outside of these bounds, right? So if it's above 5180 or below 5064, it's just a very clear trade. If it's below 50 whatever, then we go straight to this, probably near the 200 day, just under 50. Let's see, here's this level.
Yeah, we'll see. It has to, there's a ton of resistances that the market is gonna have to deal with if it's gonna go higher, right?
Yeah. No, 100%. But yeah, 49.78 to me is definite support. But we'll see. Trade coming. Tesla starting to bounce. Apple short to me is like swinging short. I just don't. If you get another bounce here, potentially, but this is my Apple chart at the moment. Let's see what. Let's go to this daily. Pull in different chart. So we tag this, call it an order block right here, 130, 150, here, kind of breakout. And that's to me why that was like a big level to tag. God, I got to zoom out just to get there. That's where they're all stepping in, right in here. So I still don't know that we're going to hold it. It's a little bounce, but if we fail again at that 135, 134 level, fail at the 134 or even lower, and we break below that 131, then the next target I have is 126. And I have targets even lower. But this purple line, this is the 200 week moving average. This is the one where, like, Tesla finally, I think, tagged it. Finally. Microsoft coming into it one more time, I believe. Oh, no. Microsoft bounced off it right here at 215. But this is how that kind of acts right now. Microsoft coming into its 50-day. We'll see bottom of that consolidation zone at the moment. I haven't seen Google. These are looking ugly. Google's almost filled its fair value gap down here from the CPI, 87.82. So we'll see.
And I actually didn't trade that much the last 2 weeks. The last week, actually. And I think that you can rely more on technicals now than anything else because of all that huge economic data, that was driving the market up and down.
Yeah.
It's out the way, so you can really find good setups now and play the setups for what they are,
Yeah. So this is what I was trying to say earlier about like credit spreads. If you're short dated, like this is Disney right now, and we know that $80 is like pretty massive support, and it's bounced probably right around here a couple times. So I'm gonna watch this one for potential bounce, but not really. I'm not going calls here. What I'm looking for is just this very short-term support to hold just today kind of thing, and then maybe sell a very tight this week, put credit spread once I see it bounce, and that's it. If you're at the money on something like that, let me see. What are we trying at 86? Yeah, I mean, even looking at this, it doesn't have to be wide at all. It could be as even a $1 wide credit spread is giving you like 30 cents. It's not bad. We'll see. I wouldn't go like $5 wide. I see nothing, no value there. But just wait for it to either reclaim, come through. For right now, there's a trade that looks like it's going to be coming here quickly on Disney, coming in on this 86 level. If it breaks, fails, I do see 78 pretty quickly. But there was this very teeny tiny little gap right here. It was the actual gap. $86.44. Looks like that we're kind of coming up on real quick. So it might be good for a little bounce there. And then we'll take a look at Tesla. We got some people looking at that one. Yeah, so Tesla back over 150. Yeah, I just think Tesla is just very exhausted right now. I don't,
Are you good at spotting capitulation lows?
What's that?
Are you good at spotting capitulation lows? Because Tesla is going to capitulate at some point, but
Capitulation. Oh,
yeah.
I mean, that's basically so. To me, it's like every trader is a little bit different, but to me, what's important and how we use like weekly ranges. Here's like an average week's range. To me, capitulation. Look, whenever anything moves the length of an average week within 48 hours, it's gonna take a chill pill for a little bit, right? So I think the market kind of bouncing up on CPI, that's got to cool off, and I think. Really, if this is an average week's range, we went, I think it was from Monday. Here's Monday. So last week we went up an average week's range, and we basically went down an average week's range. So right now, that's what I'm thinking on SPY. We're probably going to tighten this range. So in terms of capitulation, I think that Tesla's in a very similar situation where, look, this thing has moved 50% or something. Yeah, 50% in 3 months or less. This most recent, 35% in the last month. And it's battling with its 200-week. It's going to be hard-pressed to really, to me, like completely dump, but you never know. And if it does, the other day we were looking at, if it does like open down, I forgot what day it was. It's right here. Was it Friday? Thursday. Yeah, so Thursday it opens down, but immediately bought up, right? And we're just chopping in this kind of range underneath this 200-week. And this daily range is getting tighter and tighter and tighter, right? So like Tesla moved. This is why I'm very cautious with Tesla right now. Like $7 that day. $6 that day. It's just getting tighter. So I don't know that, we're going to have these big, what does this move? $15, $20 moves in Tesla. We're option traders, by the way, so we care about dollar moves, not percent. $17, $18 moves just yet. I think we kind of chop in this range. So yeah, what's this range to me is like between 165 and probably 145. My downside target would be right over here. This was my downside target on Tesla. That's about 136. This goes back to November 2020 levels. This prior consolidation right in here. This guy right there. But we're pretty close. So if you've been in this and you held through this whole way, all I can say is like you're probably very near to the end. So that is what it is. I have a buddy of mine that has a lot of Tesla too, and it's like, holy hell, check my port every day, and it's like down, down, down. I was like, well, look, it could go either way. Look, I was like, Elon could leave Tesla and go work Twitter full time, and what would that do, right? Or Tesla, and we were joking. I was like, Elon could leave Twitter and go back to Tesla, right? And I think we saw a little bit of that reaction this morning, but probably market calling BS on that one at the moment. It's when you get capitulation, when your daily trading zones are getting tighter and tighter, that's what you're looking for. You want to wait until that starts to expand. Right now we're in contraction on Tesla, so IV is coming in for sure. That's what I would say. Yeah, this says straight up neutral strategies on Tesla. So that's what I got. Yeah, Papa Elon dumping shares. Yes. I think it was like 3 billion or something in the last couple of days. All right, that's it for me. Again, guys, trade safe. Wednesday is the day that typically volume falls off. So if you're around that day, be very careful. I wouldn't expect any major moves. If there's a day that the market has some data coming out that could be pretty positive or negative, that could move the market, it's going to be Friday morning, and a little bit on Thursday morning also with that GDP stuff. So that's, I think, the moral of the story for me. For now, probably a little bit range bound. I think if I'm going to go, the one general that has not been shot, would be Tesla to me. So I'm not Tesla, Apple. If I did want to take a short, this is my primary target on this guy, and it would be down to that 130, 125-ish level. I just don't know if it's going to be this week. We got earnings coming up. Looks like late January. So I want to be in front of that IV expiration. So cool. All right, man. Do you have any final words, Cube?
No. Trade safe.
Trade safe.
Trade small, trade often.
Trade small. I like that. Trade small, trade often. Yeah, that's a good one. Yeah. And I think on Twitter, we were having some spaces issues. So if you're not on the Twitter, by the way, take a look at, I think I retweeted earlier. Oh, look, we are live there. Wolf has a ton of spaces this week. So we're on basically a lot of them. So follow this guy. We got tonight, stock picking, tomorrow morning, some option trading. I think we're going to be on with PB later on Wednesday. Tomorrow afternoon. Yeah, we're pretty full. So I'll be with Wolf for the most part, most of the week after this. Make sure to give him a follow, and you can click this link that I retweeted and then set little reminders for all the ones that you're able to go to. All right, guys. Adios, and I will see you on the next one.
Hasta luego.
See ya.